Hello, traders. It's Wednesday, May 17th. We're about an hour before the open. Let's take a look at our last two picks, do some market analysis, and then find two more picks. That's how all these videos work. Sunday afternoon, Google was a stock that I highlighted on the long side, and this is a 15-minute chart. You can see how Monday the stock did a whole lot of nothing. The market has been as flat as a pancake, but you can see that yesterday, Tuesday, Google actually put in a great day, rallying from about $117 up to almost $121. So lots of opportunities to make money on the long side there. The bearish pick that I had for you was MGM. So let's take a look at that. Same deal, except flip side. You had pretty flat day on Monday. The stock inched higher, but we're really looking for a technical breakdown, and boy, did we get that yesterday. And then the stock following through, closing on its low. Let's go into that D1 chart and see what we like so much about it. I'm going to put the automated trend lines up so you can see where they come into play. And there you can see, this is the primary trend line that I was looking at right here. The stock was here on Sunday, and I mentioned to you, we need to see that big breakdown with a long red candle on heavy volume, and that's exactly what we got yesterday. And it took out the 100-day moving average along with that trend line. That's the kind of price action that we want to see. So another nice pick. We'll take a quick look at Google to see what setup we like there. Here we have multiple breakouts through these high plus trend lines, and you can see the strength in the stock. The big tech stocks right now are almost a flight to safety, especially ahead of the debt ceiling debate right now. Both parties are trying to reach a deal. So let's get into some market analysis and take a look at what's going on there. We'll go into the 15-minute chart first of all. Not much has changed from my video Sunday. You can see lots of choppy price action on the 15-minute chart. Green and red mixed candles. Lots of overlap, so no directional movement. If we zoom out, then we can really see that there is a whole lot of nothing going on. This is a gigantic compression. The one thing that's kind of curious is that the market has not sold off in here to put some pressure on politicians to get a deal done. Credit default swaps are rising as politicians drag their feet. This is the only thing really weighing on the market right now. Everything else is pretty balanced. You have decent earnings season we just got through. Economic releases have been better than feared. Still decent economic growth. The jobs numbers have still been pretty good. But we're starting to see some signs of a recession. You've got the banking crisis on the regional level still kind of brewing. Everybody's waiting to see if the second shoe drops there. We've got a Fed that still might be in tightening mode. The market's looking for easing this fall, so there's a big disconnect there. But the debt ceiling is the only real news that we have going on in the next week or so. We don't get any major economic releases for a couple of weeks. Plus, we've got the Memorial Day holiday in there. Folks, we're going to be in this exact same type of trading pattern until then. So, the debt ceiling, could that possibly cause a big sell off? I've seen a few of these. Typically, what happens is both sides try to flex their muscles, they try and have the upper hand, and it gets to the 12th hour, and then the market finally has a big crackdown. All right, guys, enough nonsense. Let's get this thing done. Everybody knows we're not going to default on the debt, so let's get the deal done and stop dragging your feet. So a deal gets done, and even once it gets to the 12th hour, they'll have very temporary funding measures that might last a week or two just for them to finalize their agreement. So any drop that we see down to the major moving averages is going to represent a buying opportunity if we get down there and if it is credit default, credit ceiling related. So watch for that. Anything down to this 400 level, I would consider an opportunity to buy. perhaps even just sell some out of the money bullish put spreads on strong stocks. I think that works. Favor the tech sector. Tech stocks have been leading the charge higher, so I think that's where you want to be positioned. You won't get long to have this trade executed, meaning you get this drop down here, it's not going to stay there very long. And you're going to see an immediate bounce right back up. So again, if this is debt ceiling related and the market sends DC a warning sign, better get your act together. It will be an opportunity because I'm expecting more of this. Chop, 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 up and down. We need to see how all this plays out. All the Fed tightening that we've seen over the course of the last 10 months, that is now just coming to roost. So we have to see how it's going to affect the global economy, how it's going to affect the domestic economy, how it's going to affect the banking sector, how it's going to affect earnings. And that is just going to take maybe a few months for us to see how this starts to play out. So I'm thinking by probably September, October, we may see a dip in there somewhere, but ultimately this fall should be pretty good heading into year end, especially if we come below these major moving averages. We should have some pretty decent opportunities to get long. The caveat always is provided that there is not a banking crisis. So we'll see how that plays out. For right now, you've got to keep it very short term. You have to focus on some stocks that have relative strength and relative weakness, and then you have to wait for your turn during the course of the day, and then you can trade those stocks from the long side or the short side. Yesterday, you would have spent a fair amount of time right out of the gate. You get this drop. Well, these are long overlapping candles. Is the market going to bounce back here and keep going and filled in the gap immediately? Who knows? Oh, here we go. Boom, boom. Two red candles. You still have no idea of what could possibly be happening. So here you get a little probe for support. You start seeing some mixed overlapping candles. Now you've got some tails down in here. Okay, in here you've got some signs of support and you have a bullish 1OP cross. So about an hour after the open, this is where you would have wanted to be in there buying Google. And you could have even taken a look and said, hey, you know what? Google is so dang strong relative to the market that orange line above zero, I'm going to get in earlier here because it's already taken out the prior day's high and let the market chop around. It's not going anywhere. So I don't have to worry about the rug getting pulled out from underneath me as far as the market is concerned. What I do need is I need to see stocks that have nice D1 technical breakouts on heavy volume, just like this, and that are showing signs of relative strength. So that's what Google did. You had lots of opportunities to get long. Take a look at MGM. You want to see that orange line below zero. So market's soft on the open. You're getting short in here going, all right, well, I'll be on that side of the market. Stock starts to find a little bit of relative strength in here. Market has a little bit of relative strength. You exit. Set an alert at the low of the day. Hey, here we're back in because the stock is weak relative to the market. It's made a new low for the day. It's taken out those major technical support levels on a D1 basis that I just pointed out. Now we've got a really nice trade. So you find a handful of stocks like that each day, and you put yourself in a position to benefit from that upward sloping trend line. This is where you can feel pretty confident taking a short position. I'm not knowing that this is going to happen late in the day. I'm just operating on the premise that nothing is going to happen with the market because all this price action tells me we are not going anywhere fast, certainly on a 5-minute basis and absolutely on a daily chart basis. So that's how you should be thinking about your trading right now. I'm going to go in, going to highlight a couple of stocks. I'm going to show you a new feature that we're about ready to release. And we're going to go into our bullish searches. I still like Google, by the way. I think that stock is going to continue to work. and I'm looking for a stock in particular, and I'm trying to recall which one of our searches that might have actually come up on. Anyway, let's go right to the chart. Let's not waste any time here. Symbol is APP. And I like that D1 breakout. Now you can see we've got multiple trend lines converging right at that 200-day moving average. Big volume, excellent relative strength. Let's zoom out, take a look at that longer term chart. Ugh, yuck. We do not need to be sticking our head in that noose for swing trading, thinking that, oh, we need to be a bottom picker in here. Now, this is pretty decent support, though, because the stock did put in a low, and then it put in a higher low double bottom. This is a cup and handle, so you've got your cup. The handle retraces about half of this distance, so pretty classic setup there. I like the fact that the stock has been able to rally after earnings. You can see the A right there, and it's been able to stay above that 200-day moving average. So I like all of that. If I come in this morning and the stock is relatively strong, this is a 5-minute chart. This is how the stock is going to start the day off. By the way, the S&P futures are up about 15 points. So they're retracing a lot of yesterday's losses. So the stock is going to open relatively strong. What I'd like to do, love that D1 chart, I would like to buy a dip. Just like yesterday, you get this gap down yesterday, stock sells off, finds support, and then whoosh, higher. Well, right here, when the stock crossed back above the zero line and it gained its relative strength, that's your entry point right there. And look, you would have had nice gains in it. So the new feature that we have, it's an alert feature. And we have an alert console that you'll see here. For those of you who are currently members, take a deep breath. We're still beta testing this. It will be released in the next day or two. This is how it would work, is you would come in and you would set this alert, and I've already got one set here. I want it to be strong versus the SPY on a 5-minute basis, and as soon as that signal goes from negative to positive, I'll have an alert. So let's go in. I'm going to delete this, and I'll show you how I configured that. So I'm going to create a new alert. I'm going to put in my symbol, APP, and then I'm going to select the rule, and I want it strong versus the S&P 500. Strong versus S&P 500. Let's add that rule. Now that I've added it, there's another caveat here. If the condition is already true, then the condition needs to go to false, and then true, and then I will get my trigger. I'm going to save it, and now you can see, and I'll get a pop-up alert when this happens. So let's review what this is actually doing. It's saying, hey, you know what? I am above zero right now when I'm starting the day. So for me to get an alert, if it's above zero, well, I would be getting an alert right away. And the point is, I want to buy a dip. So it has to go negative on that 5-minute basis, and then it has to go positive, and then I'll get the alert in here. So I like this stock. I like that breakout. I think it's going to be a really nice one to day trade. You can see, though, that the stock is relatively choppy. So it had been dormant for a while. Now we've got a nice breakout. This is going to be one that you want to buy on dips, just like that. It's not straight up. It's going to have pullbacks, but it has a tailwind and it wants to move higher. The volume was not great yesterday, so we also want to see some nice volume coming into the stock. The other one that I had that I liked was similar in symbol, so please don't confuse these. This is a bearish pick that I liked, and the stock is AAP. So we had APP and AAP. This is Advanced Auto Parts. I like this technical breakdown. We're going to zoom out. Here you can see that stock has been in a pretty steady decline. So it gets this little bit of a bounce in here, and now we're cracking down below that trend line. Stock closed very weak yesterday, relative weakness. So let's take a look at the 5-minute chart to see how that stock closed. It was weak relative to the market. So what I'd like to see today, we have a 15-point S&P bounce this morning. So I'd like to see this go positive, and then I'd like to see it go negative. So the stock bounces a little bit this morning. It recovers some of those big losses yesterday, and when it curls back over and it goes negative, that's when I want to get my alert. If that happens to line up with a bearish market cycle, so let's say the market rallies hard out of the gate, then we start seeing some wicks, then I know that the short side is going to be where I want to focus my attention. And always when we have a gap up, our best scenario would be a gap reversal. I went into that a little bit on Sunday, so I'm not going to rehash all of that, but that's where my greatest probability is going to lie. So market opens somewhere up in here and then can't hold that bid, and starts to crumble. AAP is going to be a stock that I would like to short. And I don't believe we're going to make it quite back to the high from yesterday based on the opening so far this morning. So that is going to provide some resistance this morning. So here's my tactic for AAP. Let's come in here. We're going to create a new rule. Symbol is AAP. Select the rule type. I'm going to use strength versus SPY. You can see we've got a number of other indicators that we can select from. LRSI is one of them. Buy and sell signals is another one. We can place the alerts based on price. We can base the alerts on an SMA. All of that's currently available. Ultimately, over the course of the next month or two, you will have dozens and dozens of variables that you can pick from to construct these alerts, be it on a 5-minute basis, be it on a swing trading basis where you're using D1, or where you're using a fairly complex rule base with mixed time frames from M5 to D1. So this is going to be a fantastic feature. I can't even imagine the different types of patterns and rule bases that all of you are going to come up with. So here we're going to be looking at for the stock to be weak versus SPY on an M5 basis. So we're going to add that rule, and we want it to go above and then below. So we're going to click this box, and then we're going to save it. And now I've got two stocks queued up for today. I'm looking to buy dips on on APP, looking to buy dips on that, and I'm looking to short rips on AAP. And now I just have to wait for those alerts to come in. I don't even have to hawk the stock. I just wait for that alert to come up. That's all I've got for you today. Look for a choppy sideways market. These are two stocks that should work really well. So when you have a market that hits an extreme, and then you start seeing support, 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 support. Now we've got some tails under body. Okay, I really don't have to worry about the market going anywhere right now. This is a pretty decent place for me to try some longs on the notion that couldn't sell the market off, it's probably going to get a bounce. So flip side, you rally up, and now you're starting to see some wicks, and you're starting to see resistance, maybe some bearish hammers, maybe a bearish engulf. Okay, this wouldn't be a bad place to try some shorts. Ultimately, you can try longs and shorts on stocks that have those D1 breakouts on heavy volume. You must have heavy volume. If the stock doesn't have heavy volume, it doesn't have a prayer because it's going to have to do all the work on its own. You have no market tailwind. So make sure you've got that volume and that D1 technical breakout. That's what we're going to be leaning on. And then even then, intraday, you still have to wait for those. If you're buying, you have to wait for those dips, and then you buy that dip. If you're looking to short, you've got to wait for that bounce. And once that bounce in the stock runs out of steam, then you can short it. Thanks so much for watching, everybody. I'll be doing my next video Sunday evening. Good luck with your trading. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.